please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Other big bank that announced numbers on Friday, Bank of Baroda, actually is a tale of two trends, if you please. Very good growth, improving core profitability, but on the other hand, rise in slippages as well. P.S. Jayakumar, Managing Director and CEO of the bank, joins us. Good morning, Mr. Jayakumar. Thank you very much. Well, first, let me take the good news forward. It was very good, loan growth that you showed, over 16%. What's a maintainable trend?
So I think not only the loan growth, but the overall financial results looked at from every point of view was quite satisfactory. I think we stay with the guidance of about 15% on a year-on-year growth. It may be, more like 13 to 15% range is where we are looking at this point of time.
Okay, let me get to the bad news then, which the slippage number at 5630. It wasn't just that the slippages were higher than last quarter. You have also guided that you have still to provide some 865 crores for the NCLT cases. There is a genuine worry about credit cost. Can you give us some guidance on both slippages and the provisioning that you will have to do this quarter and FY19?
Okay, let me go over it this way. The slippages for this quarter was elevated by about 2,200 odd crores versus a prior quarter, primarily on account of slippages of two big accounts, one in the telecom sector and one in the power sector. Sans that, our actual slippages on a QOQ basis was actually lower. It's a bunching up of this transaction. We hope these accounts get resolved over a period of time. Okay. So that really is what it is. But if you have to look at the other core item, X, leaving aside, and we're expecting the slippages for some time to come, I think it is pretty much a decent story, I would say.
Okay, but this telecom that you're speaking about, it won't get written back? It's one of those other telecom companies that will not get written back?
Well, it should get written back. Let's see. There's an expectation some of it might happen as early as March of this financial year.
Okay. Mr. Jayakumar, good morning.
Good morning.
Slippages were a bit lumpy in this quarter. Directionally, though, do you think that the stressed loan ratio is on a decline for the bank over the next few quarters?
Well, if you look at the standard restructured asset, that number is down by about 2,000 odd crores, 2,700 crores. So essentially, what has happened is the slippages are those accounts which were in the restructured standard category, from where the growth has happened. The increase in the slippages has happened. To that extent, we are now having a lower level of stress asset, and the net NPA plus stress asset number as a ratio has also declined by about 80 basis points.
Okay, so if you have a lower level of stressed assets, can we expect a sharp reduction in credit costs over the next, say, 1 to 2 years?
See, directionally, what is happening is there's a massive effort in transforming the bank, product, processes, system, people, quality, distribution, etc. So as these take effect, and as we come to the end of the cycle with respect to the non-performing asset, and given the fact we have an extremely healthy PCR coverage, I think all of this augurs well as we look ahead.
Okay. Mr. Jayakumar, you're one of the outsiders to the entire public sector banking system. What has been your bank's approach to the entire digitization? Google has tied up with the other four banks, 3 private sector and SBI, and now there'll be WhatsApp payments as well. You all have not tried to get into this either Google tie-up or any other way to capture this retail market?
No, I think it is not just Google or those kinds of tie-up. I think fundamentally we have substantially increased our digitized process in many ways. We have moved to a core banking system which is open to API. We have run a very good hackathon, and we're making some new good products coming from there. We've built a fairly sophisticated digitized sales finance program. We have also built and just now launched a cash management program. Our trade platform is going to become fully digitized.
So
it's just one item of the digitized.
I agree. I'm just asking you, what will your guidance therefore be for retail growth? There are brokerages who are positive on SBI even after those numbers showed a lot of slippages because they will be able to mine data better given the digitization. What are your retail numbers, forecasts?
No, I think there are two aspects to it. One aspect is the ability to build a distribution channel and get the cross-sell ratio worked out, more products per customer. And on that, we're continuing to make good progress in terms of building the distribution channels. For us, the distribution channel, other than the bank, has been quite minimal. So as those takes place, we should see an increase in the growth of the retail and, for that matter, the other businesses as well. That's one element of it. We are also in the process, or already have set up a center of excellence with respect to information technology and with respect to analytics. And as these things take shape, we probably would be able to mine the data better. The fact is, this growth in the retail business is not a last quarter story. It's been there consistently for 4 quarters. And that's what should give us some degree of confidence that we can continue to keep the trend. And so the results for this quarter are just not, for this quarter, it's just a continuation of the trend that you're seeing. Last quarter also, it was a fairly good result. So I think if we can deliver a couple of more good quarters, then I think some of the concerns will by themselves get addressed.
Are you looking at listing of any of your subsidiaries or sale of any non-core assets over the next 6 to 12 months?
So let me break the question into 2 parts. As far as listing of subsidiaries is concerned, no, many of them have not reached the scale that would enable them to be listed. So we need to continue to focus on building the business. As far as the non-core assets are concerned, yes, there is a plan to sell. We hope during the course of the following year, we should be able to, exit from those kinds of non-core asset investments and, in various financial institutions, etc., which do not really provide us any real value. And so we are focused on that. It's dependent upon the market factors as well as we come to the divestiture of these assets.
Okay. Have you any number in mind, ballpark, that you may be raising through non-core, separately capital raising plans?
Well, there is a certain amount of opportunity over there. And as far as specific guidance are concerned, I would prefer to avoid it. Okay. But we do have some headway, some room over there to get going ahead in divestiture and raising capital, so to say.
Okay. I also just wanted to get some thoughts on what's happening on the domestic corporate side, because a lot of banks are now trying to reduce their concentration to large vulnerable industries and, increase exposure to the share of A and above rated companies. You've been doing the same as well. How much do you think your exposure could increase to some of these A-rated companies over the next, say, 1 to 2 years?
I think the ability to build up the A-rated portfolio is coming primarily from the fact that we're now able to offer a more complete set of products to our customers, some of which are of good value addition. And it's also becoming a good method of acquiring customers, especially with supply chain and with cash management. We're getting a lot of customers we hitherto never banked with us. So therefore, I am fairly confident that we should be able to grow new clients, which is really the focus on the corporate bank side. Okay. We've been trying to add more clients, new clients, different industries, just as a method of ensuring diversification of our base. Okay. And so that process continues. But that doesn't mean we only focused on A-plus customers. There are other transactions that are happening, except that we're far more careful in the way these are structured so that, we kind of insulate themselves from shocks.
Okay. Finally, Mr. Jayakumar, can you leave us with some guidance on your slippage ratio for FY19 as well as the credit cost, the provisioning you will have to do?
So as we go into FY19, that is starting from April of this year, I think we are quite positive about the whole thing playing itself, the story playing itself out. Specific guidance I'm not able to give you right now.